The government on Monday ordered power plants based on imported coal to run at full capacity for 3 months starting March 16. It has invoked its emergency powers under Section 11 of the Electricity Act because the government is expecting peak power demand to surge to 229 gigawatts per day in April, compared with a peak demand of 210 gigawatts in January. Now, Tata Power and Adani Power will be two plants that are in focus, since they have coastal power plants that are designed to operate on imported coal. Of course, there's a long list of plants, these two being very important ones. Today, I have with me Mr. Praveer Sinha, Managing Director and CEO of Tata Power. Mr. Sinha, thank you very much for joining me. Well, first up, what will this mean in terms of increased capacity utilization for you at Tata Power?
Thank you, Lata, for having me on the show. I think it's a very good move and a very timely move by Government of India to invoke Section 11. And this is because the demand of power is going up. In fact, this year, even in the winter months, we've seen the demand going to 205 and 206 as peak power. And as rightly mentioned by you, the peak in summer is expected to be 229 or maybe a little more than that. And to cater to that requirement, it's important that all our power plants, whether it is on domestic coal or imported coal, operate at full capacity, as also all the renewable plants and all the other generating capacities that we have. For Tata Power, it's very important because we have the imported coal plant. It's a 4,000 megawatt Mundra plant, which has been running, I would say, last year during the period Section 11 was invoked from May to December. And since then, we have been in discussions with the other procurers to finalize the supplementary PPA on similar lines as per the CRC order on Section 11. For us, we will operate the plant from mid of March to mid of June, and if it gets extended beyond that also. And it is expected that the tariff will be on similar lines as has been approved by CRC. And it will be a cost plus tariff to that extent.
But no, first overall, I wanted in terms of number of units. How much do you expect you will be able to generate in March, April, May, or rather April, May, which are 2 full months, compared to a normal month like, say, January?
So we have 5 units of 4,000 megawatt. And one of the units, of course, is down. There was some problem with one of the transformers. We hope we will be able to recover that by March. But all the 4 units will definitely operate at full capacity as we had been doing last year. And we should be in a position to offer the full capacity to all the 5 procurers. So you can expect that 3,200 megawatt will definitely come. And if we are able to revive the 4th unit, then the 5th unit, then 4,000 megawatt will get generated.
Now, what will this mean in terms of differential pricing? I know it is cost plus, but what is the cost in terms of the difference of coal cost? I believe coal is expected to touch $225 per ton by the time we reach April. I don't know what your calculation is, but how much more costlier per unit?
So the coal prices, which went up to $300 last year, the HBA price, is expected to actually come down to less than $200 in the month of March. And we do expect that the coal prices will be less than $200 in the month of March to June. So we expect that the tariff will be substantially lower than what it was last year. And I say that it would be less than 6 rupees as the variable cost of power from these plants.
And you will be fully able to recover it either from the PPA, the guys who have signed the PPA, or from the exchanges at no loss?
So we will be able to, based on the Section 11 order of the CRC, it will be on a cost plus basis. That means full recovery of fixed cost and the variable cost will happen. And we expect we will get full pass through of all these costs.
What do you expect is going to be the impact on your own P&L for both quarters, Q1 and Q2, because a part of Q2 also gets covered. Q4 and Q1, what may be the impact on revenue
Well,
and
the
margins?
details, yeah. So the details are still to be worked out. The order came just yesterday.
Yes.
And I think once we work out the details, we'll be in a position to share. But what I would say is that it would typically be what it was last year in the October-December quarter, or it was in the July-September quarter. So I think more or less on similar lines, you can see the results.
Okay. Will all discoms cough up, sir, or will you be left with receivables?
No, the discoms normally, because they need to open the LC and or advance payment has to be made. So payment will be received, and we do expect that based on the demand increase that is expected in the coming months, they will definitely be scheduling power from this plant.
Okay. So you are quite sure that you will not be left stranded with power generated but not consumed?
Absolutely. And then, of course, the provision is there that if the discoms are not scheduling the power, you can sell the excess power in the exchange, and the difference can be shared. The benefit of that can be shared with the existing procurers. So I think it's a very fair arrangement that has been projected. And the purpose is that enough power should be available in the country to meet the growing requirement of power.
Okay. Well, just a word more on the Indonesian coal mining JV. How do you share the profits? Is it entire? How is it worked out?
Well, we have a stake in the Indonesian mine. So based on what is the profit, the board of that company decides every year. It also keeps on incurring huge amount of expenditure on repair and maintenance and improvement of the mining operation. So it's a decision of the board of the mining company.
Okay. We are separately given to understand that the government is going to go after renewables company and blacklist those that are, not up and running. What's your sense? Will this mean that there will be more competition, or, is there any impact on your own company?
No impact on us because all our projects which we have to implement, we are implementing as per schedule. The government itself has given an extension for many of the public sector projects to be implemented up to September 24, and some of the other projects up to March 24. So I think most of the developers should be able to complete the project considering the extended timelines which have been given to them. So I think we should not have any backlog of projects beyond March 24.
Okay. One of the highlights of your previous results, quarterly results, was that the profitability of the Indonesian coal businesses had improved. So therefore, for Q4 and Q1, should one expect, should one pencil in more revenues from there?
See, as I mentioned to you, that the coal prices are coming down, and it's a very dynamic situation.
Okay.
We see news, which is the index in Australia in last 1 month has come down by $100. So we do expect that the HB and other prices will also come down in next 1 month. So it is a function of what is the coal prices and what is the demand of the coal in the international market. So it's very difficult for us to do any prediction on such things.
Okay. Can you give us some guidance in terms of the EPC revenues and performance of the TPSSL, the solar unit? You all reported a very healthy order book. So revenues from both these, are you expecting it to increase?
First of all, we don't give guidance.
Okay.
Secondly, our growth you have seen in last 13 quarters has been very good, and we expect the momentum to continue. So what you can see is our very good performance in our renewable business to continue, as also in very many of our other businesses, including our generation and transmission and distribution. So the growth chart that is there of the company, or the growth path of the company, will continue in future too.
Okay. Tata Projects, there was a talk that there would be an IPO. Anything you can enlighten us since you are a 48% shareholder?
Nothing at present.
Okay.
We'll definitely come back if there's something planned.
Okay. And your own solar unit, you are not thinking of hiving it off. It'll all be one integrated unit?
Yeah, absolutely. We have set up a separate entity which is for our renewable business, and we are focusing on enhancing the renewable business in all the areas,
Okay.
right from manufacturing to EPC to rooftop.
Okay.
So I think we are very focused in our growth areas.
Okay.
And you will continue to see excellent performance from Tata Power.
All right. Just once more, if I can ask you that question in terms of higher cost, the price you charge now for 1 unit of thermal coal-generated power, and what it will be when you use the imported coal. How much can the difference be? Will it be 10% higher, 20% higher?
On a like-to-like basis, it may be about 10 to 15% higher.
Okay.
But on an overall basket, it will be a very, very small increase. It is, in any case, for a short period of time.
Okay.
And it is only impacting very few plants. So I think if you see in a basket, it will be a very, very marginal increase in price.
Yeah, and I guess it's a very small price to pay to have power when the economy is doing well and when the summer is blistering. Mr. Praveer Sinha, pleasure speaking with you. Thank you very much for joining us today.
Thank you. Thank you very much, Lata.
Well, that's it on this edition of It's the Economy. It's time for Chartbusters after a break.